Welcome to Stuck Time to Improv. I'm Mary Scott with Business Riff, and I want startups to be wildly successful. One of the industries we don't talk enough about is the agricultural tech industry, which is prime for startup businesses. And today I'm very happy to have an investor, Jim Schultz, with us, and we're going to talk about what startups in ag tech need to know before they talk to an investor. Thanks for coming, Jim.
Thank you for having me, Mary. Looking forward to the conversation.
So, what kinds of things do you see in ag tech?
It's pretty broad spectrum from opportunities in traditional row crop to specialty crop to animal health. More specifically, Mary, what we're focused on today is automation and robotics, opportunities to better optimize the data that's coming off the farm. Many farmers that we know here in the Midwest complain about all the data and the inability to really tap into it and use it in an effective way. And so that's one of our focuses, what we call the digital farm. And then lastly is there are a lot of new technologies in the biologic space to replace synthetic chemicals. And we're looking at those as being opportunistic as those start to roll up into new opportunities and new ventures.
Okay, so if somebody's got an idea for a new piece of equipment, what kind of ducks do they have to have in a row before they talk to you?
I think three things are important to us, Mary. One would be understanding the channel strategy, particularly if it's a piece of equipment or if it's any kind of technology. How do you get it to the farmer or rancher? And who's your partner to make that happen? Secondly, would be to have field trial data if it's a crop. If it's a piece of equipment, how many different fields have you been on? What types of different crops have you operated in? So that field trial data is going to be important. And then third is expertise around the team, whether it's advisors or board members that have knowledge of the ag space. We have seen in the last 10 or so years a number of new entrants into the ag space that maybe did not have historically backgrounds in ag. So that's going to be important to have good advisors around the table to help guide the company as they move through the channel and navigation of the ag opportunities before them.
Sounds good. So, what kind of mistakes have you seen people make?
Oh my, how much time do we have today? Yeah, I think the main mistakes, if we go back to those three items, probably the one that is most glaring to us is the channel strategy, where the idea is to go direct to farmer or rancher. We think that's a very difficult path. Uh, doesn't mean it can't be done, but I think that's one of the mistakes we've seen. It's a slow build up to building top line revenue. Secondly, is lack of good data, field trial data, or other kind of trials with customers to prove out that the technology truly does work. If real quick example of that, Mary, let's say that you have a new robot that has the ability to weed, and you say we can weed anything, and all of a sudden you go out and do tomatoes and then cabbage and you do corn, and it doesn't have the same efficacy because the sensors maybe are not fine-tuned enough. So understanding the field trial data is going to be really important.
Sounds good. And how do people connect with these channels? I mean, I recall the old-fashioned cooperative extension. Is that
Mhm.
still a good place?
So the cooperative extension still does exist. I think it's probably more toward looking at the ag retailers or the farm co-ops that are member owned as being the best channel. So in my hometown, I live an hour and a half east of St. Louis in the town of Effingham, Illinois. We have a local co-op called the Equity. They have approximately 8,000 farmer members. Those members own the co-op. And so the ability to get to those 8,000 farmer members, I think I have that number right, but let's say it's 8,000, is really enhanced by a relationship with management at a company like the Equity. So, as an entrepreneur is seeking to get into those channels, developing relationships with those ag retailers or farm co-ops is going to be rather important.
Okay, because you always need farmers to beta test your stuff, right?
Yes, yes.
So, what kinds of things would you like to see that you haven't seen yet?
Oh, wow. Probably it's still burgeoning, but I think more opportunities to deploy AI in some of the data that we're seeing coming across. John Deere has a technology called Field View that provides farmers with additional insights of what's happening in their fields from the tractor diagnostics or the combine diagnostics. Using that all of that data and incorporating that into an AI opportunity is probably one of the next fields where we see investment capital where we deploy it.
And I would also think some holistic approaches, because just because you can find a crop that grows faster and yields more doesn't necessarily mean that it tastes better.
That's correct. And we have seen some opportunities in that where there are efforts to make soybeans have a different oil content or corn to have a higher fiber content or sugar content. So there are different opportunities for farmers to get a premium by raising those types of crops. And in today's age, where we're seeing today, I looked at the Board of Trade numbers for soybeans. They're trading just above $12 and corn at around 450. To be profitable for farmers, they need to be around 12.50 for soybeans and around $5 for corn. So we're under water, so to speak. So if you can create premium opportunities in corn and soy, which we're most used to here in the Midwest, that does create, I think, a way for farmers and entrepreneurs who have those technologies to drive better prices and more profitability to the farm gate.
And what's the impact of organic farming?
Very important. We've invested in a few companies that are playing in that space. We have actually an organic chicken or poultry production operation on the East Coast that has done fairly well, called Shenandoah Valley Organic, or Farmer Focus is their brand. We think the consumer is more demanding about where their food comes from. And so we do think that there are very investable ways to pursue organic opportunities.
Right. And right here in St. Louis, we have Vertigreens, which is all
Yes,
hydroponic, and she's growing tons and tons of lettuce in shipping containers.
that's amazing. That's terrific.
So, is there any other advice you might give to a potential ag tech company?
I think making sure the marketing deck is well thought through, and the three items I mentioned earlier, the channel, the field trials, and the team, are going to be important to us. A good financial model will also be something I would recommend you develop before you come to us. Mary, on average, we see about 500 to 600 deals a year and fund anywhere from 2 to 4 of those deals. So the funnel to get through is very narrow. And so the better and more crisp your presentation is, the easier it is for us to understand and to get through, and to want to pursue diligence is very important.
So, startups, make sure you do a lot of practicing and
Yes.
do and go talk to your community organizations and see where you can do pitch practice before you take it to an investor. Thanks so much, Jim Schultz. We'll put contact information in the comments so people can find out more. And I'm Mary Scott with Business Riff. I want startups to be wildly successful, and one of the best things you can do to accomplish that is book a call with me at businessriff.com. And join us again next time for Stop Time to Improv.